Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, welcome back to the show.
Jim, summer's almost over. We're getting ready for September.
John, InZinc Mining published results for its West Desert drill program on Monday, and the stock is down. What doesn't the market like about them?
The market is unhappy because the press release indicates that the big step out to the east of the West Desert deposit failed to hit anything particularly interesting. They did hit a very high grade 1,400 gram per ton silver vein of 0.3 meter type of interval. This hole was drilled beneath the old Utah mine where they chased these skinny high grade lead zinc fissure veins. I mean, this hole was 44.5% lead. They had hauled out 2.7 million ounces back in the old times. But the goal here was to find the carbonate replacement style system that's enriched in copper and zinc. There had been that whole CC43 done decades ago, which had nipped 3 meters of high-grade copper and zinc with a good silver credit. And the goal was to intersect this area and figure out if there is a substantial extension of the West Desert deposit 670 meters to the east. And the company did not really explain what it intersected down there. I did finally have a chance to talk to Wayne Hubert, and he says the structure is really tight down there, that the Juab fault is not as open as it is in the main area of the deposit. They've left the hole open so that they can go in there and do some directional drilling, probe around and see if there's anything else down there. But their focus is now shifting to the western part of the deposit, where in early June they had reported the result of the first hole, which demonstrated that in an area where they thought the deposit was cut off, the mineralization, the scar mineralization actually still exists, as does the CRD mineralization on the other side of the Juab fault. So the market, after waiting 2 months for a hole that was basically drilled some time ago, the absence of any sort of graphics explaining what's going on, is a little bummed out. They're now drilling the Indy project in central British Columbia. That's an old Cominco zinc play. Market doesn't have any great hopes for that. It would be a shallower system than what we have here in Utah. So the stock kind of like sagged. It's been under selling pressure since that 35 million unit financing done at a dime last December came free trading. That audience had figured out some time ago that the big step out to the east was probably a bust, and has been saying goodbye. Meanwhile, zinc has dropped from that $1.40, $1.50 range. It's dropped as low as $7, $8 per pound. It's now bounced back, so $1.15 per pound. But the whole resource sector is in a big bearish mood right now. So, and zinc supply is new zinc supply is gradually coming back on stream. There are still some pretty optimistic assumptions about the ability of China to ramp up its zinc supply, and if those prove unfounded, we may still see stronger zinc prices down the road. But the whole expectation of a big zinc optionality play, that has diminished considerably. Now the company's focus is to the western part, and they have realized now that the geophysics is very murky in this area. They've now recognized that the Juab fault, which was always assumed to run east-west, and therefore all the drilling done was in the north-south area, they realize it now jogs to the northwest, and the farthest westernmost hole that they drilled, number 4, was 125 meters step out from hole number 1. It intersected some zinc. It was more oxide zinc, and you don't really want the oxide because that has a more complicated processing a problem to it. But they did have a very thick interval of magnetite, 50% magnetite, where clearly the copper and zinc had been depleted, leached out of it. And their plan is to step to the north of this and drill a deeper hole to try and hit the sulfides that they believe to be underneath. Now, one of the things that the company has not done a good job of telling the market is that they are stepping back from the original scenario of the 2014 PEA, where they were going to mine, have a 6,500 ton per day underground mine targeting 2% zinc with a copper credit and also processing the magnetite. That was a 40 million plus ton deposit. They're now going back to an earlier PEA where they had 10 million tons of a 10% high-grade zinc, and the goal now is to double this to a 20 million ton high-grade zinc resource that can be underground mined, perhaps at half the scale, maybe 3,000 tons per day rather than 6,500 tons per day. And the results that they delivered give them optimism that in the western direction, they now have several hundred meters of running room where they can develop additional high-grade resources. They're getting very good grades. And but the market's a bit bummed out because, by the end of when they finish wrapping up with Indy, they'll have just $1 million left. They do want to go back to the West Desert and start doing smaller step-outs in the vicinity of Hole 1 and Number 4, October, November. The hole Number 4 is right at the limit of the patented claims, so when they step westward, they'll be on the unpatented BLM claims, which are a different permitting process. So that's in the works, but they've done a poor job of really explaining to the public what's all going on, where their thinking is. And so the stock has kind of sold off. It's got this big overhang of 19 million warrants at 15 cents, which sort of make everybody think, well, those people, the underlying 35 million shares from that private placement have probably been dumped into the market. Maybe there's still some left, and this is now coming out at the 7.5 cent range. But when in my conversation with Wayne, I did find out that yes, they are waiting for September 1st to arrive. They have a project in Utah, apparently not that far from West Desert, but far enough away that it can't be part of West Desert, where they plan to do some staking. It's a new target they've generated. They call it Project X. August 31st is the deadline for paying the BLM fees. It's a huge headache for everybody. The BLM collects all these fees for mining exploration claims and really doesn't give anything in return, doesn't have an assessment program or anything where the information generated by explorers can be available for future explorers. So hopefully by mid-September to late September, we hear what other target this is. This is a grassroots target, a blind target. It's somewhere out in the flats. So that might give us some excitement down the road. It's an undrilled prospect. But for now, the focus will be on West Desert, the western extension, see if they can, through additional drilling, boost the resource from 10 million tons of high-grade zinc to the 20 million ton and develop it at a smaller scale. They will need to do a good job of turning around the market perception that this is a dead story with too low a zinc grade. So hopefully we see that start to come into play in September.
We'll have more with John Kaiser right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Welcome back. We're speaking with John Kaiser. John, Aven Resources continues to do well, but Ron Netolitsky's Skeena Resources has roared back.
Well, Aven's success at Forest Kerr has really been a bummer for Ron Netolitsky and Skeena. Now, he's also part of the Aven team, So, it's great to see Aven take off on the basis of a hole with several high-grade intersection. But Snip, which is farther south, has also delivered high-grade intervals. And on August 16th, they put out a news release which summarized the results for this 8,900 or 9,500 meter drill program, phase 2 that they did on the eastern twin zone. It included some pretty impressive intervals such as 13.8 grams gold over 18 meters, within which is 3 meters of 43 gram gold. That's a 1 1/4 ounce. That's like $1,500 rock. The eastern twin zone does have holes into it. It was never developed when the Snip mine was shut down by Barrick after inheriting it through a takeover, and they used a pretty high cutoff grade. That was back when gold was still below $500 an ounce, and they only selectively assayed core. And then when they reclaimed the whole project, they apparently ditched all the core, disposed of it, so there isn't even historical core. So the company has been in this painstaking process, once they got the right to drill from underground, of redrilling this system, extending it, assaying broader intervals so that they can see, use different cutoff grades to model this deposit. That program is now wrapped up, and the attention is shifting to the SK Creek project, which they optioned 100% from Barrick. And of course, Barrick has a back-in right if they find too many ounces, so their goal isn't to find too many ounces. They hope to have in September a resource estimate for the 21C zone, which is basically a number crunching exercise where they're going through all the historical data. The zone had been modeled at a higher cutoff grade. They think they can mine it at a lower cutoff grade, so they are putting together a resource. But they've now decided that they want to drill the 21A and 22 zones to the south of the main VMS SK Creek deposit. These are more gold zones, and they have got a drill program starting in this area to see what they can come up with, and maybe come up with a resource in that area. It's not going to be sort of a stunning, force Barrick to back in type of thing, but they are trying to put together more ounces so that eventually they can put together a plan that combines mining the Snip high-grade underground vein twin zone, and also perhaps mining the 21C zone plus whatever it is they find to the south in the original 21A and 22 zones.
We'll have more with John Kaiser right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're chatting with John Kaiser. John, Scandium International published some news a couple of weeks ago that seems to have cheered up the market. Is Ningin any closer to being developed?
Well, Ningin is approaching a development decision in incremental baby steps. The company's strategy has been to secure scandium oxide from China, make master aluminum scandium alloy out of it, maybe even create it to certain specifications, and ship it to various fabricators around the world. A lot of them are based in Europe, and they're doing these letter of intents where the other side agrees to share any knowledge or information they gain about the usability of aluminum scandium alloy in their particular applications. And they've announced a series of these since January, and the market has been frustrated most of the year because what they wanted was one honking big giant offtake agreement that immediately propels the stock to 50, 60 cents, where then they pull in $100 million financing to build the Ningen mine. But the guerrilla strategy that George Putnam has developed is one of targeting many different end users, and there's all kinds of different potential aluminum scandium alloy uses, and they've been doing these small deals, and the goal is not to get one very large deal. I mean, theoretically, if somebody like Apple said, okay, we want to make all our phone cases out of aluminum scandium alloy, so if you can deliver, we'll take 15 tons of this stuff. Something like that could conceivably happen, but in most cases where manufacturers, they make a big product line, it's important to them that they have the material if they are going to tool up. So it is more likely that the company will announce these small 2 to 4 ton offtake agreements, spread it out over a wide range of end users, and that of course reduces the risk for the end user that in say 3 years after Ningen goes into production, the chemical plant does not really work as expected. And all of a sudden they're on the hook. They've marketed this product that's got aluminum scandium alloy in it, and they've set themselves up to manufacture, and all of a sudden there isn't a huge amount. So it makes a lot more sense to just carve out a part of one's product line and say, okay, we're going to make this, we're going to sell this. If it doesn't happen, well, that's not too big a problem for us. If it does happen, we know that we can expand it into our much broader product line. So the company is in essence setting up not so much, even better than setting up, getting CapEx funding by having, let's say, a half dozen plus or so of these small offtake agreements to take care of the initial 18 to 35 ton per annum output, but to actually expand to the 100 tons per annum that Ningen is capable of doing. And it's also helped that Cleantech has published its definitive feasibility study for its nickel cobalt project, where it will produce some scandium as a byproduct. It's not initially planning to produce a huge amount, only 10 tons per year, but they're going to stockpile a form scandium hydroxide, which will have to be reprocessed. And if the Sunrise project gets its $1.5 billion CapEx funding, well, the end users can see that, wow, if this stuff can be produced from these deposits in Australia, we're going to need a lot more than we've committed for now. Scandium International may not be the only one, may not be able to supply all of it by itself, but we see these other projects in the wings which will come in. And a couple of months ago, Scandium International published a slide which showed its vision of the future market demand in terms of price sensitivity, and also whether they're early or late adopters. And of course, the late adopters are going to be the airline industry. Everybody thinks of airplanes as the obvious users of aluminum scandium, but their certification and engineering cycles are so extended, and their backlog of planes already engineered and pre-sold is so large that they're not going to be in any hurry to do any offtake agreement anytime soon. But I've converted this little bubble chart that they created into a simpler 10-year demand evolution chart, and it's quite impressive. If there are assumptions about who could all end up using aluminum scandium alloy in that sort of $1,500 to $2,000 dollars per kilogram range, this is a 1,000 to 1,500 ton per year market, about 10 years or so after the first scandium gets produced on a standalone primary scalable basis.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.